Felix here. Everyone's talking about this crisis, that crisis, oil shortage, all sorts of nonsense, but overlooking the real crisis that literally has 25 days to be solved. In 25 days, the US will run out of one of the key fuels of the economy, quite literally. And I'm going to walk you through it. This is not one of those doom and gloom videos. I'm actually going to tell you how it impacts your portfolio, what you can do about it, how you can make money out of it, and so on. Before we do that, get your pause on Goldman's top 12 stocks that they say are underestimated by Wall Street. It's a free benchmark. Yes, 100% free. No catch whatsoever. Here it is in its full glory. ROIC numbers, long-term earnings growth, all that kind of stuff to make you into a better, smarter, better informed investor. FelixFriends.org/top12. FelixFriends.org/top 12 top 12. So you get your hands on that. And of course, none of the following is financial advice. You know that by now. That's why you're here, right? Disclaimers. Felix, give me more disclaimers. It's what all the comments say every single day. And what am I talking about here? Okay, everyone's harping on about the strategic petroleum oil reserve. It's at the lowest level since 1985. Well, who cares? Because this isn't really the crisis. Yeah, it's low and it's irresponsible, but who really cares? What actually matters is distillates. What are distillates? Well, distillates are the things you distill out of petroleum in some ways. And at the moment, they are at really, really low levels. That's 2022, lowest level in 20, 30 years. And what are you talking about here? Apologies for the slightly fuzzy chart. Bloomberg giving me a fuzzy chart today. Diesel. Now, Felix, why do I care about diesel? Give me a minute, because diesel actually underpins the US economy. Incredibly important as we talk about inflation every day. And it's literally at 2008 levels of inventory and supply. And what does that mean? It means there is a shortage. The US has 25 days worth of diesel inventory. And that's not a lot, really not a lot. You normally want to have a lot more than that, double that, something like that. Now, what would you also like to have double off returns on your stocks? Well, we made 11% so far in October, 112% so far this year. I'm just closing out of a trade. Actually, I pinged you guys if you're in the community. If you want to know more about that, well, check it out, felixfriends.org/coaching. I'll tell you at the end how you can do more about that. If you are impatient, go to this website, felixfriends.org/coaching. But I'll explain a little bit more in detail what the mission and the program is really all about. Bloomberg reporting this $200 diesel, that's a barrel, puts Biden in an ugly corner, and they are right. The diesel boom is good for whom? Well, oil refiners. You want to make some short-term money? Oil refiners are having an absolute bonanza party. Champagne all around. That's all they're living off at the moment. Champagne and, caviar or something, hopefully plant-based caviar. And they're making $86 I think that's per barrel. Yeah, so they're making an enormous amount, 40% margin or something like that of the final sales price. And you can see that is normal, which also tells you how much of a shortage there is. So this is the Los Angeles diesel futures. I just pulled the chart up and put my little moving averages over it. And you don't have to be a rocket scientist to see that this is normal behavior, right? It's just going straight up. I bet you wish you had an option on that trade, right? That would have made some serious money. So what's the solution? What can we do? How does it affect your portfolio? Well, the solution is one, and there's only one. And that's also why the Fed is doing what it's doing with such vigor. What's the solution? A recession. Why? Because it's the only thing that'll reduce demand. What uses diesel? Farming, trucking, all that sort of stuff. Why is it so important? Why is it such a shortage? Because diesel demand has recovered very quickly after COVID, whereas general fuel, petroleum, airplane fuel demand took quite some time. So the refiners weren't ready. I keep being told that there is the lowest refining capacity in the US ever or something. I don't know whether that's lobbyists talking, whether that's actually true. I can't you give an opinion on that? I haven't counted refining capacity lately. But how does it affect your portfolio? That's why you're really here, right? Well, in the medium term, which is sort of next year or so, it gives you more inflation. More inflation means what? More inflation means higher rates for longer. So I'm writing off the screen here. And what does that mean? Well, it means less demand. Less demand means what? It means eventually lower margins. And that's how we get into this earnings recession. If you watched out for, who was it today? Procter and Gamble? Procter and Gamble. P&G. Procter and Gamble. They lowered their earnings outlook. And that's, I think, what you're going to see quite a lot of, because this is a big part of it. You're going to see this a lot with anybody who is related to trucking, transport, logistics, especially, and sort of consumer staples. Now, in the short term, it continues to give us these massive, massive intraday movements, right? You go up 4% within a day. I mean, up and down within the day. Insane movements. And what does that mean? It means lots and lots of volatility. Who's that good for? Well, traders. Do you see who made all the money for the big banks in the last week and the reports? The trading departments. They're bailing out the banks. Basically, why? Because we traders make a ton of money and volatility is high. So which way is the market going? Well, you know what? Nobody knows. The market is decidedly undecided. If we get to sort of 3,800, 3,900 levels, all that CTA buying, the automated, the algo buying, the kind of dumb money flows in, we're going to get about 400 billion of buybacks till year end. That's kicking in about a week. But fundamentally, even if that gives us a nice rally into the 4,000, 4,100 or something, it's not going to stick around, because the macro data is really what fundamentally drives everything. And they are going to raise rates a lot in November and December, and apparently also in February and March, if you believe the Fed futures. So the medium term is still gloomy. The short term is potentially bullish, but potentially also cataclysmic. It's just incredibly volatile. So how do you make money out of that? Well, you can actually. You can make money out of it. And that's what we keep doing with our lovely options trades. And the way we do that is you can set a range that you make money in. So say I have a bearish trade on the S&P, which is anything below, I think, 4,000 or 4,100. Let me just see what's my break even. It's about 4,000. So if the S&P is below $4,000, I make money. And that's a pretty big room for error there. So even if we get a significant spike, it doesn't really matter to me. It's also a fairly long trade. And it's these kind of trades that we can set up. I just came off a coaching call and we found some really nice trades on Apple. We found some interesting trades on Google. We looked at a bunch of other stocks where you can be really far removed from where we are right now and be bullish from that point, or go really high up and be bearish from that point, giving you this 10-15% room for error. And that's actually what makes you money. And that takes you from, am I right or wrong on this, to I'm going to be right on this 80% of the time. Like 82% of my trades this year have made me money. And that's the key. And of course, lots of risk management and an actual proper trading portfolio and trading strategy and a proper protocol to basically follow. I mean, that's basically what we teach, is not for you to copy my trades, because that would be a dependency, but for you to actually learn the strategy, be able to implement it. And look, we made money in good years. I've made money in this year, like a lot of it, 112%. So if you're interested in learning to build an extra income stream to get that financial freedom, which is why I did it, why I started trading, is because I didn't want to be dependent on my business income. I wanted to have another set of income. And check it out down below, felixfranzl.com/coaching. All you need for that is what? Ambition and at least a 5-figure portfolio, or 6 or 7 or 8 or 9. Yeah, for people with all of those portfolio sizes in the community. So check it out, felixfranzl.com/coaching. If you're not quite there yet, then with the 5 figures, that is, then brilliant. Most exciting place to get started is where you are. Let me help you build an extra income stream with the Master Options program, which is 100 lectures plus pre-recorded program. You get access to my trading every week. You get incredible daily chat support, and you get the whole strategy and protocol laid out for you to learn and implement. felixfranzl.com/options, coupon code is also right there. It's freedom. I appreciate you watching. If you enjoy this kind of slightly off-topic macro, and let me know down below. Are you concerned about diesel shortages, higher inflation because of the incompetence there, or is it money grabbing? Is it oil companies? Is it politicians? What is it? Is it regulation? I'd love to hear your opinion on that. Put it in the comments down below. Thank you for watching.